So if we were to have this interview a year ago,
Yeah.
the answer to this question would probably be different than it is today because a lot has happened last year, having nothing to do with COVID, but having to do with the economy. A fintech organization today, anywhere in the world, and what's interesting is one of the reasons why I wanted you on this podcast, you're a continuous learner. You very quickly, I knew it wasn't that you just knew what was happening in Ghana. You have a thirst for knowledge about what's happening elsewhere. What do you think is the biggest opportunity, unmet opportunity, that fintechs need to answer in the near future? In other words, where's the gap? Because we're seeing a lot of fintechs fail. They never got the scale. Their funding's gone. But what are the pockets that you see? And maybe it's what you serve. Maybe it's the underbanked or the unbanked. Or maybe it's the people that are the unreachable based on traditional things. But what do you think it is?
Yeah, so I think it's a number of fintechs are in the payment space, are in the remittance space. I think that is well and fine. But if you just take a step back and look globally at the numbers, you have 1.4 billion people who don't have access to financial services. You have 45% of adults in Africa who don't even know how to operate a bank account, don't even know how to access that. Just going by the numbers alone, you can see that this is a lot of people. This is a really big market. And so the issue is not the demand. They do want access to financial services. The issue is that those that can provide a supply don't trust these people. So I think that fintechs can come in to sort of bridge the gap between the unbanked and those who have that supply, right? Also, another gap exists where the people who have the resources are not daring enough to try out these technologies, right? Jumo is run by a revolutionary leader. I like to say that because he believes that access to financial services is a fundamental human right. And financial exclusion is simply unacceptable. And he's been on a journey to leverage technology to make sure that he can bridge that gap. However, it has happened by being willing to take those daring risks. For example, what we do at Jumo would not have been possible 5 years prior because the technology infrastructure was simply not available. Something like the capability of storage of the cloud, which is what our platform is based on, was simply not there. That means that as soon as the technology became available, you had to quickly start experimenting, be able to see how you can build a business model around this, how the use cases apply, and trace it back to how this is going to benefit the consumer. And this is also going to solve the issue that the banks seem to have, but don't know that it's an issue. Then you package this as a bundled financial suite of services and say, this is what we can do for you. This is how we're going to bridge the gap. In Ghana, for example, only about 20% of the population is banked. That means you have 80% available for you. So I'm coming to you and I'm telling you that there is this population that is higher volumes, higher numbers, and could make up 3 times what you actually have. Now we have this technology suite that is able to do that for you, and you have to come to the table. And I think if more fintechs were thinking about it in that way, rather than running all the way trying to get to unicorn status by just valuation, but actually providing value, that is when we'll see the impact of
and actually building a business model that's sustainable profitability wise.
100%.
This is not a charity that you're hoping let's wait for the next round. So what you just described there, though, let's say in the Western countries, that same model though plays well because what you've built and what other really progressive fintechs have built is something that works for the most basic levels at a revenue positive scenario, but it's the exact same parameters for those who are banked. And in fact, maybe more so because it allows you to look at different ways of looking at credit. It makes it look at different ways of offering services that are at the very basic level, very efficient, which makes them even more efficient at the higher levels. You're not given just a sub-suite of services. You provide all services, correct?
Yes. So the entire package, and that's what makes fintech complex. And that's why a lot of people kind of have this, apprehension towards it, because you can't just say, all I do is credit score. All I do is analyze digital footprints, right? It's basically a package deal. For example, at Jumo, whether we like it or not, you have to add on these value-added services that makes the partners and the shareholders more comfortable. So everything from product design to the reconciliation, to the treasury forecasting, to the building of the infrastructure, to the integration, to the partnership management, to the portfolio and asset management, you have to come with all of that. And that is not easy to accomplish and do well enough that you have these large incumbent institutions gaining confidence in you. It requires you to have world-class talent. It requires you to have engineering capabilities that are flexible, that are fast, that are swift, because that's your value proposition. So your flexibility and your ability to learn on the go and implement, experiment, fail fast, fail forward is what these partners appreciate. So it's really a very delicate balancing act, trying to achieve your mission and satisfying partners while also generating value for the customer. And you see this in different iterations all across the world, right? And like, as you said, the basic thing is you want to provide simplicity, value, ubiquity, access to channels of commerce that can scale, right? But you have to also observe the market that you're in. There's regulation you have to deal with. Right. There's local contracts that you have to get through. So it's an ongoing journey, and you basically learn as you go and make sure that even though you fail forward.
So before we take a little break here, when your best case study, financial institution that had decent size, how long did it take to implement what you're trying to do? Because I know you're still B2B2C, so it takes three parties to work together. But what kind of time period are we talking about being able to implement your capabilities within a traditional financial institution?
The best case that I've seen happen is anywhere from 6 months to 12 months.
Okay. So I'm going to stop right there. I want to make sure everybody heard that just happened, because I talk about it on stage, I talk about it in my writing, I talk about my podcast, that's about speed. You can't say we'll do it in 18-month time period. We have the third, I think, largest bank in the country in the United States that announced 9 months ago, that they were going to come out with a brand new digital banking platform at the end of this year. And they had already been working on it for 8 months. And I'm going, it's just like nails on a blackboard. It drives me nuts, because you go, it's outdated before it's implemented.
100%.
But you're really completely transforming the core operating system for a financial institution so they can offer more, faster, easier on a cloud platform. You're doing everything. And you found a partner that also had to work with your partner that can implement it in around roughly a half a year.
Yeah.
That's the aspiration we all have. And now, obviously, when it gets longer, and that what that says is when it gets longer, the onus is not on you, because the reality is it's still the same service.
100%.
It's on the onus of either the person who you sold the services to or the ultimate financial institution.
100%.
That kind of, in American football, I say you give the ball to somebody, run down the field, then you keep on landing on the ground and breaking up the run.
Exactly.
You need to think of things different. It takes a mindset, and that's where it gets back to leadership.
100%.
Because if you don't have the leadership that's willing to say, we're going to do things completely differently, and for me, it's very much like the partnership between 10X and Chase in the UK, where Chase did not say, we're going to bring our own people and we're going to build a bank. They said, we're going to find a partnership and build a digital bank.
100%.
And so let's take a short break here and have a message from our sponsors.